Hello, Business 600A students. This is Professor Hassey. It's our week 7 video. It's a two-parter. Matter of fact, it's 3 parts. It's a introduction video today. It's a more lecture video on chapters 14 and 18 tomorrow. And then a part 3 will be Saturday, an introduction of the final examination work. So 3-part videos this week for you for our accounting finance course. Heading into our final week next week, where we'll have a lecture video on Monday, and then you'll be working on the final examination. You'll see a review of that final examination already posted in your examination file folder in Blackboard. Our subject this week is managerial accounting and cost volume profit analysis, or another word for that is break-even contribution margin analysis, both key areas of financial management using accounting data for business. A couple other things to note. We have posted the grades for the assignment number 4, and I'll be going over that just briefly. You have your project paper due this week with extensions available, and you have your final examination, which will be posted on Saturday. So a lot of work these last few weeks, and I am available if any of you need help or some information. We have our office hours Thursday evening at 6 o'clock, and also I'm available all weekend should you need any help. So let's take a look at where we stand right now in our class. If we go to our information section in Blackboard, you'll see that we're winding down our class. Assignment 4 has been completed and posted. The grades are in Blackboard. You have your assessment case paper this weekend, doing a financial analysis of a company that you selected, due this Sunday. And then on, as I just said, Saturday, the final examination, which we'll talk about in just a few minutes, which will be involved the last sections of our course, and due on March 26th with no extensions available for that. So as we also go to our assignment section in Blackboard, you'll see the solutions posted for the Apple Computer Financial Statement Analysis, and I'll go over that in just a minute. Everybody did very well on that. That's sometimes it's not easy looking at financial data and trying to do formulas out of it, and you all did a very fine job. And then if you go to the final examination area, there's a review of what's going to be covered in this final examination work that's to be posted on Saturday. Part 1 will be a question on the budget section of chapter 20. What is a budget? Why do we have budgets? Pretty obvious, but some interesting questions, and that'll be part of our lecture video this coming Saturday and next week. Chapter 24, which is capital budgeting or capital investment analysis on chapter 24. And then part 3 will be a comprehensive question interpreting how accounting and finance work together in financial management. Excuse the typo there, Professor Hassey, nice work. I'll fix that. Interpretation of how accounting and finance work together in financial management. We'll talk more about that in our Saturday session introducing the final. Each question will be an essay with some examples of calculations to highlight the essay. I will review that in my weekend video on Saturday. So that's the final examination. And as we head into week 7, we'll be looking at today this break-even analysis video, which explains perfectly the cost volume analysis of managerial accounting. Remember, managerial accounting is management accounting, where the first half of our course, when you're doing journal entries and financial statements, that's financial accounting. Managerial accounting is taking that information and telling us something. Exactly what you did with Apple Computer. You took their financial information and determined financial analytical information. In the paper you're doing for this weekend, it's about the one company you selected. You're taking financial information and determining and interpreting something about the companies in relationship to their analytical information. And also in the final examination, you'll be doing the same thing. What is the difference between management accounting, financial accounting, and how does it relate to capital management, financial management? That's a central theme of our last 2 weeks of this course. So that's where we stand heading into this week. Let's take a look now at our results of the assignment 4, the Apple Computer financial analysis. Assignment number 4 was testing your or assessing your ability to look at real world examples of financial statements as a result of accounting operations and interpret them into a financial management or a financial analytical situation using some key data of financial analysis. The main purpose of this assessment was your ability to go to the financial statements and find that specific information. And that's how I graded each of the 5 questions. Each question was worth 20 points. The first question was to determine in 2019, 18, and 17 the amount of cash provided by operations and the amount of cash paid for dividends by Apple Computer in those 3 years. Here are the answers here. Everybody did very well on that. The second question was, did Apple spend more or less cash to repurchase common stock in 2019 and 2018? Well, in 2019, that Apple had purchased less common stock by $5.8 billion. So in other words, they still bought an awful lot of repurchase of common stock. And why did they do that? Because they wanted to take stock out of the market, give a bump to their remaining outstanding shares of stock, give a bump in the stock price. Will probably go up. Why? Because there's less stock in the market. Supply and demand naturally will raise the value of that stock up. But also Apple wanted to tell the market that they are so pleased with their performance that they're basically investing in themselves by spending over $72 billion in buying back the company stock. Amazing. So I was looking for the two amounts for 2019 and 18, and the 2019 amount was different by about $5.8 billion. Question 3, what are some of the investing activities reported on the statement of cash flows? Investment activities, marketable securities, purchases and sales of payments of the acquiring of investment property like property, plant, equipment, fixed assets, payments made in buying a business, purchase made on buying non-marketable securities, investments, and proceeds of selling of those investment securities. That's what I was looking for. Just read it right off the statement of cash flow, investing section. Question number 4 was the hardest one for many of us, and partially I blame myself. I wasn't very specific on that, but I was hoping you'd be able to figure that out, because remember, a trend percent is how an amount changes from the previous year. That's what a trend percent analysis is, and I was hoping you'd catch that. So example, net sales went from 2017 to 2018, it increased by 15.9%. From 2018 to 2019, it went down by 2%. That's what I was looking for. I was looking for how they have trended up or down from over that 3-year time span. Naturally, you can't do 2017 because you need 2016 information, but I wanted to see how net sales went up and went down in those 3 years. The same thing with operating income. Operating income from 2017 to 18 went up 15.6%. Operating income went down from 2018 to 2019 by 9.8%. That's what I was looking for. Also, I was looking for to round the percents to one decimal. So instead of saying 9.8%, some of you put down 10%. But I wanted to go to one decimal point, 9.8%. And I took a couple of points off for that. I know that sounds kind of picky, but if you did not go to the one decimal point and just gave a whole number, that was incorrect. I wanted it to go to that 1 decimal point. And then in question 5, most of us did pretty well on this. What is the current ratio? Current assets divided by current liabilities. What is the return on total assets? Net income divided by total assets. What is the debt ratio? Total debt divided by total assets. And what is the profit margin? The net income divided by the amount of sales. or total revenues of the year. And there are the numbers for 2018 and 19. Everybody did very good on that. If you were just off one or two numbers, there was not a problem with that, but that's the general area of what I was looking for. Notice I didn't give any explanations. All I wanted you to do was calculate all of the 5 questions, calculate and show me the numbers, show me the reasons, or show me the interpretation of reading the financial statement. In the project paper, you're doing more interpreting of that information. What do those numbers tell you about the company and how it's changed or got good or bad over that time period of those 2 fiscal years? But this first assignment was just to practice finding that information and calculating it, and everybody did very well. That's what I was looking for in these 5 questions, to pick out specific data from the statement of cash flows, from the income statement, from the income statement and balance sheet, a good cross section of the financials of Apple Computer. Now let's take a look at a video introducing our work for this week, number 7.
In this chapter, you'll learn how costs and consequently profitability is affected by changes in volume. You might think that it is obvious that costs always increase as volume increases. However, the increase is not always proportional. Variable costs are costs that increase proportionally to volume changes. For example, if you make twice as many cupcakes, you will use twice as much flour and sugar. Fixed costs are costs that a company incurs no matter what volume they produce. The cost of depreciation on baking equipment is fixed. You will incur the same total depreciation cost whether you make 100 cupcakes or 1,000. Why does this matter? First, the difference between fixed and variable costs affects your break-even point, the point when your costs exactly equal your revenues. Entrepreneurs will tell you that their initial goal is to achieve break-even as quickly as possible so that they quit losing money. The higher your fixed costs, the more units you will need to sell in order to break even. I encourage you to read this chapter carefully. The concepts you learn in this chapter are critical to your understanding of topics in later chapters, including operating leverage, incremental analysis, and product pricing.
Break-even point for your business. This break-even analysis video explains the break-even point in words, in graphs, and in formulas, and encourages you to take various actions in your business to improve profitability. A common definition of the break-even point is the sales volume where neither profit nor loss is made. An alternative way of saying the same thing, the break-even point is a sales volume where contribution margin dollars equals fixed cost dollars. Let's look at the break-even point on the graph. On the horizontal axis, the number of units sold. On the vertical axis, the total dollars. Contribution margin dollars go up for every unit sold. Contribution margin is revenue minus variable cost, what you sell the product for minus what it cost you to make an incremental unit. Fixed costs don't vary with the number of units sold. Typical examples of fixed cost are rent, depreciation, and research and development expenditures. The break-even point is right here, where the two lines intersect. Let's put some numbers to the example. If fixed costs are $200,000 and contribution margin is $4 per unit, then the business needs to sell 50,000 units to break even. If the business sells fewer than 50,000 units, the red area, then contribution margin is lower than fixed costs and the business is loss-making. If the business sells more than 50,000 units, the green area, then contribution margin is higher than fixed costs and the business makes a profit. Let's do the exact same break-even analysis, but in formulas. The break-even point is the sales volume where contribution margin dollars equals fixed cost dollars. That's the same as saying that the volume sold times the contribution margin per unit equals the fixed cost dollars. And that's the same as saying that the volume sold to break even is equal to the fixed cost dollars divided by the contribution margin per unit. And that's the same as saying that the volume sold to break even is equal to the fixed cost dollars divided by the selling price per unit minus the variable cost per unit. Let's fill in the numbers to illustrate. $200,000 of fixed costs. The business needs $200,000 in contribution margin to cover that $200,000 in fixed costs. At $4 contribution margin per unit, $10 selling price per unit minus $6 variable cost per unit, the volume sold needs to be 50,000 units. That's all very interesting, but what should a business owner do with this information? The first thing that comes to mind is to try to sell as many units as possible. Increase the volume sold. But that's not the only choice the business owner has. He or she can also work on reducing the fixed costs, increasing the price per unit, or reducing the variable cost per unit. Work on all these variables at the same time, and the break-even point becomes dynamic instead of static. Want to learn more about business, finance, accounting and investing? Then subscribe to the Finance Storyteller.
Okay, there's a couple of videos introducing our topic for this week, managerial and cost volume profit analysis. Managerial accounting is understanding that a cost can be shown differently. You have material costs, labor costs, period costs, advertising costs, all kinds of costs in a business. But if you want to determine the break-even point or additional financial analysis, you need to isolate those costs by variable and fixed. Once you do that, you can produce information like discussed in that video. And we'll look at a couple of problems exampling that. Problem 14.1 on page 567, and problem 18.2 on page 732 in your textbook to highlight these two, which you might see examples of in your final examination. So that'll be in our second video of the week, which will be posted on Friday, March 17th. Happy St. Patrick's Day. Now, what I would like you to do in the meantime, until this Friday or this weekend, is make sure you're comfortable and understand your grade in the course up to this point in time. We're basically about 3/4 of the way through our grades of this course. You need to make sure that you understand where you stand in this course, your grade average, heading into these final works, the project paper, and the final examination, which is basically almost half of your course grade, just these 2 bits of information or these 2 work projects you're doing in the next couple of weeks. So understand where you stand in the course. If you have any questions or concerns or need an explanation, please feel free to contact me during our student hours on Thursday or at any time via email, or if you'd like to set up a separate Zoom with me, be more than happy these last 2 weeks. Also, in the meantime, you've probably received an email from the University of Laverne in regards to the course evaluations for this class. I would like you to fill those out as you complete the course next week, and I'll talk more about that next week or this weekend and next week. But if you should have received the link to do our course evaluations. Thanks, everybody. Good luck on your finishing up your project paper. Again, if you need extension, please let me know this weekend. And we'll see you again on Friday in our next part 2 video for this week 7. Have a great day. We'll see you later. Bye-bye.